Now for commodities market update, we see oil prices rose today as investors embrace expectations that oil producers will add supply at a meeting today as a sign that fuel demand remains robust despite the spread of the Omicron variant of COVID-19. Brent crude futures gained 43 cents to $79.41 a barrel, while U.S. West Texas Intermediate crude recouped its earlier losses, rose 33 cents to $76.41 a barrel. Now for commodities update, let's bring in Osike Wajide, research analyst, financial derivatives company. Happy New Year.
Wishing you the same.
And great to have you.
Always
First one for the year.
Yes,
Anyway, how would you, we've seen oil quite volatile in 2021. How would you describe the performance, in 2021?
We saw, I'd go back to as far back as 2020, the year before, and we saw oil prices plunge when the pandemic set in. We saw OPEC do, in quote, whatever it took to revive oil prices. They were successful. They've been somewhat successful, and that had to do with taking away as much as 10 million barrels of oil away from the market. So the market stabilized. We saw oil demand also plunge, which triggered the fall in prices. But in time, as the recovery has continued and also stuttered, we've seen oil prices rise steadily, fall steadily, rise and fall. Obviously more than fall, to reach 86, it peaked at $86 a barrel sometime during the year, but now it's fallen to just under $80 a barrel, and that's thanks to OPEC. Majorly, we have, like the OPEC Secretary General pointed out, there's increased threat from non-OPEC sources, non-OPEC supply. We saw the alliance, or a proposed alliance between major oil consumers, the US, China, even Japan, to tap into their strategic reserves, just to increase oil supply and taper oil prices, as it's beginning to impact on the price of gasoline, which impacts obviously inflation, which could impact on economic recovery across the global economic recovery, not just the recovery in this.
And it was quite dramatic, with the U.S. trying to
yes,
trying to control prices.
Obviously, with the threats that they would reach into the strategic reserves, it was supposed to make OPEC react, but OPEC didn't react and said, I'll call your bluff. Do whatever you think you can. How much reserves do you think you have, and how much impact would that have in the market? But obviously, it's not had that much. It's not had any significant impact. Oil prices. We saw the impact of the Omicron virus. It's been short-lived, so to speak, and oil is back, fell to around 70. Now it's back just under 80. So in the coming weeks, obviously there's the meeting today where we see OPEC is expected to continue with its output plan. It took 10 million barrels off the market in July, and resolved that from August through to July this year, it's going to steadily increase production by 400,000 barrels a day. So that, obviously, it's taking into cognizance all these other factors: the recovery of the global economy, the increased way countries have dealing with the virus. Countries have improved or have grown accustomed to in a way, living with the virus and just begin to opening up their economies. We've seen that Omicron, the impact has been mild and short-lived, so we expect the economic recovery to continue and increase oil demand, which will absorb this extra 400,000 barrels.
So I guess it's safe to say it was quite a bullish year for oil.
Yes, it was. Yes, it was. Oil started the year at $50-something a barrel, closed the year at just under $80 a barrel. So the average price was somewhere around $70, $71 a barrel.
And I remember in 2021, the first week, it was quite positive for oil prices, and fast forward to now, it seems like it's towing the same path.
Yes. I mean, giving all these things I listed before, oil started the year at just around $50 a barrel. And everyone looking to see what OPEC would do, looking to see if they would maintain a united front, which they did. They understood that, look, we have to maintain this united front for the world to take us seriously. And yes, the world has taken them seriously. Markets are always just like every month, markets typically just sit back and wait to see what OPEC resolve, if there will be any alterations to their plans of increasing oil supply by 400,000 barrels a day. And it doesn't look as if that plan is going to change. It's going to continue through to July. At the moment, they have about 3.4 million barrels of oil left, of 3.4 million barrels increase left through to July, and we expect to see them to that path.
So is it a positive outlook for 2022?
Oh, yes. Yes, we have some outlandish forecasts of over $100 a barrel for 2022. Some more pessimistic, about $60 a barrel. But if we call $60 a barrel a pessimistic outlook, then I think it's safe to say that oil prices will do between 60 and 100, somewhere around 80. $70–80 a barrel, so it's a win for countries like Nigeria.
Okay, so the OPEC Plus, will be having a new face come, I think, August, Haitham Al-Ghais. How is this? How is it going to impact this the market? Having this new man.
The Secretary General is more of a ceremonial head. It's safe to say it's more of a ceremonial head. For the past 6 years, it's been the Nigerian. It's basically the Nigerian representative leading the face of OPEC.
Right.
So it's not OPEC Plus now, OPEC. And the two biggest players in OPEC, the Saudis and the Iranians, it's more like a gentleman's agreement not to have representatives of those countries leading the alliance. Those countries are at loggerheads politically, and it's always left to the smaller producers within the alliance to field a candidate, and that candidate is then put as the face of OPEC. It doesn't really change direction policy-wise or trajectory-wise as to what OPEC is going to do. The decisions have been made, and we know, okay, Iran is facing sanctions by the US, and when those sanctions, they're in talks about taking away those sanctions. When those sanctions are taken away, Iran's output is going to increase. OPEC will probably need to sit back and recalibrate as to how do we account for this increase in output from Iran. So while that being said, Saudi Arabia and the Iranians, it would make sense not to have anyone from any of these countries leading the pack, so as not to be seen, so that the other party doesn't see any decision being taken as being biased against it. So it's
all right. So well, now bringing it down here, seeing price of PMS, there's a lot of talk about subsidy removal, for 2022, and the prices of oil actually have an impact on that. So what's the outlook for PMS in Nigeria?
Depending on when the subsidy removal actually occurs, as talked about, it's happening as early as February, and the Labour is talking about going on strike to prevent it from happening. It's talked about by the end of H1. Higher oil, at this point in time, OPEC is, the NNPC is already paying huge amounts in subsidy. So higher oil prices mean higher amounts being paid in subsidy. Don't forget, we now have an official, albeit for the time being, have an official exchange rate that's depreciated by 20 naira. So basically, NNPC bringing in the exchange rate used to bring in PMS before was 410, 415. Now it's 435. So we have a higher price. So it's either the NNPC absorbs that higher price or it's passed on to the consumer. So if you have a higher oil price and a weaker exchange rate, you pay more. The landing cost is higher. It's higher. So if that's not passed on, it has to be absorbed by the NNPC, which NNPC plans to become a limited liability company. That it's not very positive for its books. So, and given that you want to have more money, government needs to have more money to carry out its infrastructure plans and all whatnot. It already has plans to give out 5,000 naira in palliatives to the poorest Nigerians as some sort of transport palliative. So while that's at the moment, the calculations almost offset each other. The plans to pay out 5,000 naira to 40 million and the expected gains from the subsidy removal, at the moment, they basically offset each other. Right. So, but with higher oil prices, that math changes. So it will be interesting to see how it plays out. But we know that higher oil prices mean higher subsidy payments for Nigeria.
And talking about foreign exchange, I would say our external buffer rose by about 14.46% in 2021. Was it just the SDRs that contributed to that, or was there more?
Okay, that was the SDR, $3.35 billion. There was the Euro bonds, about $4 billion. higher oil prices, higher forex receipts, even if we had lower oil production, that impacted on it. And we also had increased intervention, forex intervention by the CBN. It would have been obvious, the external reserves position would have been higher, but because of this, this continued intervention by the CBN to increase forex supply to the market. So at the moment, it's, I mean, 40, the accretion in the market was up till October. From November, we saw a continued decline in the external reserves position. That was because the CBN upped the ante as regards to its intervention in the market. So, but as it is now, because we've had a slight a 20 naira depreciation in the forex market, what it means is that if you wanted $100 million before, and you had this X amount of naira to buy the $100 million, it's become more expensive. So if we're going to have, what it means is that if there's increased supply in the official market, and the dollars are actually more expensive now, you have less demand in the parallel market. So while this is depreciating, the parallel market will appreciate. So because you have less demand in that market. So that's the logic. So it's a gradual movement towards convergence.
Okay, do we see the trend, you know, this, you know, last year we saw it after it got to about 40 billion. We saw that trend of it going down again. What's the outlook for 2022?
It depends on what the CBN plans to do. Is the CBN going to continue with its rates of intervention? Are we seeing is any plan by the government to borrow externally? Do we have those huge, like, as much as $7 billion that we got from the SDR and the Euro bonds? If we're not going to get that, then we might see the external reserves decline. If intervention continues at current pace, it might decline towards $36, $35 billion, just to give exchange rate stability.
Yes. All right, and the World Bank projecting inflation in Nigeria to be the highest globally this year. Quite scary.
Oh, yes. Basically, a number of things are driving inflation. I mean, even the expectation of subsidy removal, the removal of the subsidies from power, and then of the exchange rate pass-through. Even if we've seen the headline inflation numbers fall for 8 consecutive months on base effects, eventually base effects will wane. And all these exchange rate pass-through, higher logistics costs, higher PMS, price of PMS, all these things will impact on inflation. And even insecurity on food prices, especially in the food-producing parts of the country. Those things with insecurity now, it's not just that last year we've seen a decline in the harvest production in the harvest season. Now, the planting season is at hand. Farmers are afraid to go to the farms to plant. So we might have a crisis on our hands towards what's supposed to be the harvest season in 2022. If the farmers cannot even get to their farms, then they can't plant. If they can't plant, there's nothing to harvest. So inflation might just, it's not looking good for food production towards the middle of the year, and that's something that would affect inflation. So the World Bank has foreseen all of this is going to impact inflation. Inflation as high as even the CBN has came out to say some months ago that inflation above 12% is growth retarding. Its target is 9% inflation. At the moment, we're at 15.4%. The impact on savings, impact on consumption, it's plunged. You know, the most vulnerable set of Nigerians, it's plunged them into poverty. About 7 million of them. It's going to distort investment savings and consumption decisions by governments, individuals, and households in 2022, 2023, if efforts are not made to taper.
Okay. What's the outlook for agricultural, commodities in 2022?
Like I pointed out earlier, insecurity is a major factor. If we cannot plant, we cannot harvest. If we cannot harvest, there's no harvest, basically. So, I mean, while some commodities are grown in the south, where it's relatively more secure, the major staples, I mean, the tomatoes, the pepper, the things that you get from the north, beans, onions, those prices are expected to soar. While the cocoa, the rice, and other commodities that you can plant in the south, those prices there might be increased demand. So those prices are expected to rise. On the whole, it's not, we're looking at higher agri-commodity prices in 2022.
All right, Nosike, still early days here. We'll see how everything plays out. Thank you so much for coming on the program. Nosike Nwajide, research analyst at Financial Derivatives Company. All right, we'll take a moment now.